Hi, welcome back. In this segment, we are going to talk about something that happens a lot that I see with some clients. Unfortunately, sometimes this happens a lot to women and also men, but I see this more happening to women. One of the things that we all should know is that whenever we do our taxes, if we file a joint return, if you file a joint return with your husband or wife, we pretty much say that we are responsible for that and that is accurate. So we technically file a joint liability. So what happens a lot whenever we marry someone who has a business, sometimes we don't know anything about that business. We don't know what our husband or wife does. And so they do the taxes and we file married filing jointly and we say that everything is accurate and that we are responsible for what we put on the tax return. Now, there has been cases, and I'm pretty sure that many accountants, and I'm pretty sure it has happened to you sometimes, where we file a tax return and we say we don't know, and then we don't really know much about what our husbands or wives do, the ones that have businesses. And 2 years later, we get a letter from the IRS, and that letter says that we owe them X amount of money or that we're going to, be audited. If you go through the audit and if that audit results in saying that maybe we owe money, you owe that money too as well, even though that was not your business. Sometimes that liability can be attached to you. There are many reasons, and there are many reasons why the IRS will go ahead and if you sign that tax return, there are ways that you can fix the problem, but it obviously is going to take for someone, an accountant, to help you through the process and explain the process. This is more of a case of a IRS resolution where you will have to file certain forms and follow up a process where you tell the IRS that you didn't know what was going on, and so your tax advisor should guide you through this process. The other thing that I see happening a lot is that a lot of people are surprised sometimes when they're supposed to get a refund and they don't get a refund. And that can happen for many reasons. Let's say you marry someone and they do owe child support. That child support sometimes, they might pretty much take it. Also, student loans, unpaid student loans. If your husband or wife defaults on student loans, it's very likely that that because they have defaulted on this loan, if you do get a tax refund, the IRS will take that. So those are the things that I see happening a lot. I always advise that if, as a woman or as a man, you don't understand the business that your husband or your wife is in, request to see the statements and see how much it was reported and how much money the company made. At the end of the day, what is reported on your tax return jointly, you are responsible for paying. You're saying that it's correct. And if you're signing on something that you say that is correct, you should check it yourself. And you also have the right to file separately. Even if you are married, there are two options. So one way not to attach yourself to that liability or that risk is filing separately. And I can't say that's the best way. Sometimes married filing separate does not give you the same tax advantages as married filing together. But if you do suspect that perhaps you don't understand or it's too risky, you don't understand the business or your husband's or your wife's business, and you want to avoid the risk, married filing separately is a good way to avoid that risk. We'll see you next time with another tip at Impresa Tax. My name is Gabriela, and please follow us on YouTube or Facebook.